In this video, we will talk about how markets usually move at the end of the year. We are now in December, so what should we expect until the end of December and what will happen in January 2025? Okay, welcome to this YouTube channel. We are a YouTube channel of stock pickers and my name is Christophe Nour. I've been investing in the stock market for almost a decade with a performance of 25% per year. And the stuff we're going to talk about is not really important because we invest for the long term, but still we have to be entertained. So here is the solution for you. You clicked on this video because you wanted to see the movement on the stock market, and the TLDR of this video is usually it goes up. Especially if you have a winning year like we have today, normally the December month is very good. That's on average, but that's the TLDR. Now we'll go into more details. I'm here on an article explaining how you have the monthly returns month by month, and you see that you have some seasonality between different months, different quarters of the year. That happens. You have the capitalism that is moving, leaving, so that's normal. You have a proverb called sell in May and go away. This is kind of true. And you have a election year in 2024. Most of the time election years are up, strongly up, I would say. So it's normal that we have an excellent 2024 so far. And what you see is at the end of the year, October, November, December, on average the months are up. The stock market is up. October is a double-edged sword. You have either very bad months or very strong months, but we see a lack of volatility right now for the current market. Seems like everything is going up smoothly. We don't have tweets or changes in the world order or major disruption in the tech area. So it is just evolving nicely and you don't see a lot of volatility in the market. So that's good news for us long-term shareholder. And you see here a similar chart. You see that at the end of the year, normally you have what is called the Santa Claus rally. I mean, they can call it whatever they like. This will be the Thanksgiving rally, Santa Claus rally, January effect. Call it whatever you want. Normally, most of the time, stocks go up, so it's normal. But we have a name for this one. And you see that this phenomenon of going up at the end of the year is something global. It's not only in the US. Come on. If you look at the major stock market indices, seasonality trends, monthly average returns, you see the comparison between different performances between the S&P 500, the Nasdaq, the Dow Jones, the German DAX, the Euro stocks, the British FTSE, and the Japanese Nikkei. We don't have the French CAC 40, but that's the equivalent. Most of the time, September is horrible, and for October, we don't draw a lot of conclusion from October, but for November and December, normally we end the year on a positive note. You know why? I will just explain. Most of the time, the stock market is going up, especially for the US. So most of the time, the month of November and December are following what starting the year for the first 9 months of the year, first 10 months. In other words, if you have a good start of the year, let's say the first semester of 2024 was amazing, was great, you have a very high chance of having a second semester also very good, also positive. And you have a lot of incentives in Wall Street to boost this demand. In other words, if you are a fund manager in Wall Street, a portfolio manager in Wall Street, and the S&P 500 is already up 10% and you are down 2%, you are underperforming. You are threatened to be fired because people give you money to manage the money and make them wealthy. If you don't make them wealthy, you have a very high chance of getting fired. So maybe you have a conservative strategy, maybe you invested in China, but you are underperforming in June, let's say June 2024. What do? Either you continue like this and you may get fired because that's how Wall Street is working, or you sell all your underperforming stocks, Chinese, European stocks, and you buy what has been working. You buy Nvidia, you buy the tech, you buy the Russell recently, the Russell 2000. you buy some stocks in the US. So a lot of the time you see this phenomenon happening, and in semester 2 follows semester 1, and some underperforming managers start to buy momentum stocks. So the second semester of the year has a lot of demand for these sexy stocks that have driven the stock market at the first part of the year. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Additionally, when you have a stock market that is going down, imagine if we are in 2025 and we have a bear market or something like this. Most of the time, semester 2 will follow semester 1. And what about this year, 2024? Okay, so here is the picture. You have a lot of stocks that went up a lot during 2024, but you have some stocks like Europe and China that went down. What you will see at the end of the year, and starting in January also a little bit until February, you will see tax loss harvesting. You will see that some managers want to reduce their tax burden, their profits, so they sell stocks that underperform. They sell stocks that were at a loss. So you reduce your profit, you pay less taxes. In other words, if you had bought, I don't know, let's look at LVMH, our French brand. If you look at LVMH year to date, it's down 11%. It's down 12%. Okay. A lot of managers will sell LVMH right now in December to buy it back in February. So you have an additional selling pressure for underperforming stocks. You have not underperforming, losing stocks. I'm about to sneeze, sorry. Okay, that was a fake. You have a lot. So for the remaining 20 years of 2024, expect stocks that went up to continue to go up. Expect stocks that went down to continue to go down. That's on average what I have seen over the years. So yeah, keep in being invested, keep your winners, and that may be a good opportunity for you to trim or to cut your losses or to do some tax loss harvesting. The simplicity of the situation right now for the remaining days doesn't mean that you have to do nothing. Maybe you can take advantage of this momentum effect to sell some of your shares because you expect them to continue to go up, and that's fine. Or maybe for you, it's good to do some tax loss harvesting and to sell your losers. Wait a little bit and then sell when they have declined a lot. So that's good. And what I plan to do for the remaining of the year, frankly, do nothing. Maybe I will buy a little bit more land bridge at the moment. I will sell some of my Occidental Petroleum to buy more land bridge, but that would be the case for another video. But for the moment, I plan to do nothing. Just sit tight and enjoy the ride. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.